Are you looking to grow revenues, increase profitability, or obtain financing? If so, you came to the right place.
Running a business is all about leadership. How do you become a better leader? Learn from the successful entrepreneurs and business owners how to lead your organization more effectively. That's why we created Leadership Live at 8:05, Talking Small Business, to help you succeed with your host, Andrew Frazier, Business Growth Pro and CFO and founder of the Small Business Pro University. Every Tuesday evening at 8 p.m. Eastern, we're joined by experienced entrepreneurs and business owners who share their secrets to success via live stream. Also, every Friday morning, we release a new podcast episode. Either way, you will learn about developing your business leadership skills from our roster of highly performing guest experts. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbpro.u.com.
Good evening, everybody. Welcome back to Leadership Live at 8:05. I'm your host, Andrew Frazier, and excited to be back here once again on Tuesday evening with you. Each Tuesday night, we have just a great time chatting about small business, key things that you as an entrepreneur or business owner or future business owner could benefit. Because at the end of the day, your success in business is going to be primarily based on your leadership abilities, your leadership skills. So each week we bring a business expert, someone who understands small business, who's been a business person and or a thought leader or someone who can really bring something to the table that can help you develop your leadership skills and understand and learn things that will be valuable to your business. So this week we're going to be talking about a topic that's extremely important and something that most small business owners have a really big challenge with, and that's pricing. When I think about pricing, one of the biggest things is most small business owners underprice or undervalue what they're doing. And as a result, that hurts your profitability and your ability to be successful long term. So I think having this conversation, getting more perspective on it, can be very helpful. So tonight I've got Cecile Reid. She's joining me. She's a CPA. She does great work for different clients that we work together on. And we're going to talk about pricing and, but to understand pricing and to be able to price right, what's the first thing you need to do? Of course, you need to be able to understand your costs. So we're going to talk a little bit about costs and expenses as well, because, at the end of the day, it's not how much you sell, it's how much you make. And making sure that we've got the pricing based on, and, the costs is important. So I'm going to have Cecile Reid come on and she'll tell you a little bit more about herself, but we're just going to chat about pricing. Thank you in the audience for joining in. We always have great people from around the country and sometimes around the world. And we invite you to join in. Feel free to comment, feel free to like, feel free to ask questions, because that makes this session even better, because tonight is for you, not for me and Cecile. These are things that we have a good understanding of, but we're here to help you get a better understanding of these things. So let me invite Cecile on right now. Hey, Cecile, how you doing this evening?
Good evening. I'm really well. How are you doing, Andrew?
I'm great. Great. Thanks for taking the time out of your busy schedule to join us.
Thank you for having me. Thank you for having me.
I think Cecile's joining us from Barbados, right?
I am in sunny, well, not sunny right now, but I am in usually sunny Barbados.
Okay.
We're on a bit of a time difference. It's just after 9 here, and you're just after 8. But
yeah. Well, yesterday we sort of had a Barbados day because we got above 70 degrees, which is
that's brilliant.
Unseasonably warm. But of course, it's colder again today. But yesterday was nice.
Okay.
So, but definitely, it's good to have you here.
Thanks for having me.
We've got an important topic, and I think we'll be able to chat. Really just talk, about some key things that are helpful. But before we do that, I knew you fairly well, but you're probably new to mostly everybody in the audience. So could you take a minute or so to sort of talk about where you came from and a little bit about your journey to where you are now?
Well, I am from Barbados. I'm in Barbados now, but I spent quite a bit of my adult life outside of Barbados. I lived for almost 20 years in Philadelphia, and I worked for an organization. It's now called Verizon Communications, but it was Bell Atlantic when I joined it, and Verizon when I left. And so did quite a few different roles, but mainly in finance, um, in Verizon, but I was able to start out in production line. We made yellow pages, and I was in that company. So it was good to come straight out of college with my MBA and get some opportunity to look at manufacturing and working with collectively bargain for employees, etc., and all of those challenges, and then go on. Then I became a certified public accountant, then moved into some of the more pure financial streams, financial analysis, a little bit like investment banking, and doing going through and doing projections and in treasury finally looking at benefits and benefits planning and working. I have a degree in actuarial science, so then working with actuarial firms to do certain costing and projections for Verizon. I left Verizon very much with a passion to start working with and for small businesses, and I had a company in Philadelphia, and then I spent a few years in London doing some work with small businesses there as well, and also getting myself a little bit more up to speed on the accounting and finance challenges in the UK, and did some studies with ACCA. I'm a CPA, but I was studying the ACCA curriculum just so I could understand the differences between the US and the UK accounting rules. Then I was able to get an opportunity back here in Barbados, and I've worked in Barbados and started also a small business in Barbados, working with small businesses here. And then Andrew and I have met, and I do, thanks to the pandemic, people are much more comfortable with connecting online and getting the necessary support that they need. And so I do offer counseling, whether it's direct QuickBooks coaching. I'm a pro advisor in QuickBooks, or anything else. And so I do a lot of training, consulting, and coaching online now, right from sunny Barbados. So that is such a privilege. And so I was thrilled to accept this invitation to come and talk with your subscriber base about some of the questions that they would have about costing, because they are what I love about what you do, Andrew. It is getting small businesses the information and the coaching that is just part and parcel of life in the Fortune 100. And so when you work for a Verizon Communications and then you start working with small businesses and you realize how many more tools large businesses give themselves that small businesses, I think guilt themselves out of allowing themselves to have. How well advised, a company like Verizon will have a full legal staff, 30, 40, sometimes 100 people in the department, and then we'll still get an outside counsel expert opinion on a legal matter. And there'll be small businesses who don't have any legal support and will feel guilty about not wading into an area of legality on their own. And So I think the key to that is to find organizations such as yours, such as mine, that are willing to bring this Fortune 100 understanding, and be able to offer that as a service. And then small businesses can take as much or as little as they can afford or absorb, because their plates are often very, very full.
Yeah.
And so I'm pleased to be here tonight.
Okay. No, thanks for joining me. Definitely what you're talking about is key. I mean, at the end of the day, as you're in business longer, and if you're going to grow in business longer, you have to run your business more professionally. You have to build the structure you need around you to be successful. And that's, some of the things that we do, because, as a business owner, you may have never been in organizations and seen how they work as they grow. And, I think that's an important thing to know, is as you grow, you have to be more sophisticated in a lot of different areas. And a lot of times you can't do that with help, because it's impossible to do anything that you haven't seen or have a understanding of. And a lot of times you might not know what to do. So, there's nothing wrong with getting help. Actually, the best people out there get help. John.
Yes, exactly.
And so you want to continue with that. Got some friends on there as well. JMD Janitorial. I think those are some people as well. And so, one of the first things when we talk about pricing is, so we want to start with costs, because you need to know how much things cost before you can really come up with prices. So there's, two major categories of costs, and, just to set the framework and the groundwork and perspective. And those are generally looked at as fixed costs and variable costs. So what are the different? What are they, and what are the differences between them?
When you think of fixed costs versus variable costs, that's generally, you're gonna go down this avenue when you're trying to understand how much each unit that you're producing is costing you. So not everything you will be able to purchase just for one unit. So you'll have to buy, and this isn't about buying in bulk. This is about buying something and then using it to create multiple products. So let's try to simplify it. If you were a baker, you would buy flour, eggs, sugar. You'd probably be able to say, okay, this is how much I need to make 4 cakes. But then if you purchased a industrial oven, it might be a little bit more challenging to easily in your mind wrap your mind around, what does the oven cost per cake? What is the per cake cost for the oven? Because the oven is a fixed cost, and no matter how many cakes you produce, you need that oven. The cost is there. Whereas with flour, if cake sales are down 1 week, you might not buy as much flour as you would when cake sales are up. And so because of the difference in flexibility, and also the difference in assigning a cost to each unit, the best way we as financial thinkers have to categorize those two costs is to call one fixed and to call one variable. And I find in the small business world, or people who maybe aren't don't have quite a lot of accounting background, that nomenclature can be a bit challenging. It's not intuitive. So I like to say the cost that you have to purchase, the setup costs, people can get their mind around that. Your setup costs, those things that you have to pay for just to start, just to produce one. And then the cost that you continuously absorb in order to keep producing. So so fixed costs are analogous with setup costs, and variable costs are analogous with ongoing costs.
Okay. So, yeah, so definitely you got the fixed and the variable.
Right.
And, one of the key reasons they separate them is because they behave differently. Like you said, the variable costs, basically, they vary, but they don't just vary. They vary based on sales. So
see, here again, you're getting caught up too with the varying and the fixed.
right.
It isn't that those costs vary, is that those costs can be changed by you. So they're not varying costs, they're variable costs.
Right.
And it was a way for financial thinkers to say this cost is variable, meaning can be varied, meaning that you've got some control over how much you spend in this category. So those weeks where you're not selling as many cupcakes, you're going to purchase less flour and certainly fewer eggs. So you can control your egg and flour costs, but you can't very well control your oven costs unless you're renting your oven. But you can't really well control your oven costs because you will tend to buy an oven just to start the cupcake business. So it isn't about the fact that the costs vary, but the fact that they are variable by you, the owner. And it is a reflection of how much control you have over those costs. And because fixed costs or the setup costs, you have so little control over, especially if you're going to go forward to a lender, they want to make sure that you've got a great understanding of what your fixed costs are and if your revenue is going to cover them, because there's so little you can do to reduce those costs. So that's why businesses, especially small businesses like bakeries, the most stressful time is before you've paid off that oven, before you paid off that giant KitchenAid mixer, before the stressful time is before you've paid off those fixed costs, because there's so little you can do as a baker to drive those costs down. But with flour and eggs, if sales comes down, you can go very quickly to those and turn them down as well and give yourself some wiggle room.
Okay, cool. So yeah, so I mean, definitely, there's differences. When you got the fixed costs, like Cecile said, these are things you got to pay whether or not you make any sales. So you don't have a lot of control. Yes. But fixed costs can vary. And that's what confuses a lot of people, because they hear variable costs and they're like, well, it's different every month, so it's variable. But it's really...
No, varying and variable are two different I will say we are very lucky as small business owners to live in a time where we have this concept of AAS, which is as a service. So many things that were fixed now you can get as a service. So maybe you ran a transportation business. Maybe you did special taxis, picking people up and taking their kids to school. And so you bought a bus. Well, now we live in such a subscription-based marketplace that you could rent your bus. So when your subscribers, the people who are your parents, cancel their service, and you went from maybe picking up 30 kids a morning and dropping them to school, and now you're picking up 10. Well, ordinarily that bus would be a fixed cost because there's nothing you could do. You're just going to have a half empty bus. But now if you're using transportation as a service, you could switch from the 30-seater bus to the 15-seater bus. Mm-hmm. So now we really have to think about, is that bus a fixed cost or is it a variable cost? Because if you can nimbly adjust your costs when in response to your sales, then what you've got is a variable cost. Even if for all traditional viewpoints, it's always been a fixed cost. So you own the bus, it's got your branding on the side of it. Well, guess what? Overnight, they can strip that branding off and put somebody else on and give you a smaller bus and brand that one. well, then your bus is a variable cost. And that is an exciting place to be at. And I think that's where we are now.
Right. I mean, the current environment really, you have some advantages as a small business. And, the key to unlocking those advantages is really, first, you have to be proactive. You can't wait for things to happen. You have to act and look at, what the best things are. But not only proactive, you got to be creative. If you can creatively solve a problem that people have, either a need, want, or desire, there's room to take advantage of that. And right now, needs, wants, and desires are changing a lot. So there's things coming up that are needs that nobody's satisfying right now, or nobody's satisfying well. So, as a small business owner, if you're more creative, you may be able to, move your business in front of that, and then flexible. You can be more flexible than any larger company. So you can solve it and work with them and solve it in the way they need. So, definitely in this day and age.
I definitely think that it's if you're thinking of strengths, weaknesses, opportunities, threats, it is an opportunity for small businesses because they can, like you said, it's about meeting needs. And you don't necessarily need the infrastructure and the fixed costs that you may have traditionally felt you needed. You can rent, you can subscribe, you can find other ways to put your toes into the water and explore different market lines, because those fixed costs you're turning into variable costs by using subscription services. And generally, to the extent that your fixed costs are minimized, your overall flexibility and responsiveness to changes or volatility in your marketplace is increased. And so if you can survive a fluctuation, then your business will survive longer. And if you can, keep your business doing well for 2 to 5 years, the likelihood that you have a long-term business is really great. And so if you start out with as much built-in flexibility, then even if you misstep and you make a mistake and you lose some customers as a result, you've got to learn from some mistakes. If you've minimized your fixed costs and put as much cost over into the variable, it means that you can ride out those storms a lot better.
Okay. No, definitely. So, that gives an overview of sort of fixed and variable costs. So that's like the first step, but we're going to go into, some additional details to really give you some idea how you should really be thinking about your costs and how you can figure out what they are, because sometimes it can be a little confusing. So before we do that, we're just going to take a second. The Leadership Live at 8:05 is produced through the Small Business Pro University. So probably be good for you to know what it is. So I'm just going to take a 1-minute video, give us a chance to get a drink of water, and then Cecile and I will be back to chat more about small business and pricing for your products and services. Do you own your business, or does it own you? Is your business growing, and are you making enough money? As a business owner, there are so many things you need to know to become more successful. Hello. My name is Andrew Frazier, the Business Growth Pro and CFO. I created the Small Business Pro University for you. Small Business Pro University has self-paced, dynamic, multimedia learning experiences created by more than 20 instructors who are business owners just like you. Small Business Pro University will empower you to become a masterpreneur by learning the secrets to creating a successful enterprise, to go from working in your business to working on your business. Take advantage of our strategic coaching program, or just simply choose the courses that you need at www.sbprou.com. We will empower you to thrive and not just survive, and make more money in any business environment. Welcome back to Leadership Live at 8:05. I'm here with Cecile Reid, and we're talking small business. So we talked a little bit about your costs, and the two key areas are fixed costs and variable costs. your fixed costs being things that you got to pay whether or not you make any sales. So you need to make sure that you're making enough sales to overcome your fixed costs. And then your variable costs, which vary based on making sales. So you have more, they go up and down based on your sales. So now these variable costs really can be broken up into two different types, right? Generally, you've got direct and indirect variable costs. Is that right?
Yes, you can have indirect and direct fixed costs as well.
Okay.
But the when we start categorizing direct and indirect, tends to put us into the category, say, of cost of goods sold. So if we're talking about a manufacturer, even some service industries, maybe not for tax purposes. This conversation is not about tax purposes, and you should always defer to your tax provider, because taxation is not intuitive. It varies from taxing jurisdiction, and what one jurisdiction will define as a house, another jurisdiction might define as a boat. And please don't get yourself on the wrong side of those definitions. So stick with your tax professional and make sure that they're familiar with the jurisdiction that you're filing in. But when we talk about cost of goods sold, those are costs associated directly with producing what you're selling. And we'll stick with the baker analogy. So that would be the oven, the flour, the sugar, the eggs. However, you're going to have additional costs. Distribution is a cost. Getting your product in the position for your customers to see it, getting your product in the position for customers to take possession of it. Those are two different things, and they can have their challenges. You may need to have selling costs, advertising costs. There are quite a few indirect costs that can be significant and can be managed. Why the financial world chose to distinguish between cost of goods sold and other costs, because of the way we want business owners to think about their role in managing their organization. So you're going to have your revenues less your cost of goods sold, giving you your gross margin. And I think many of you have heard that. Then you have your gross margin, and then you take away your indirect costs. And that then drives you to your income, or as the case may be, loss. But what's significant about these two expenses, cost of goods sold and indirect expenses and overhead, is that as far as financial analysis goes, we do not hold management responsible for gross margin, because many times your revenue is set by market pressure. So I know that this was about how costs help you set pricing, but a lot of times your price is set by the market, unless you're selling a very unique product, and most of us aren't. It's an interchangeable product market, and so your revenue is set by what the market is willing to bear, and then minus cost of goods sold, what it costs you to produce what you've sold. And so your gross margin isn't largely under your control, because vendors set prices, customers set prices, and you just have to live with the difference: revenue less cost of goods sold, gross margin. However, after gross margin, all of the other costs, advertising, sales, distribution, etc., that then drive to net income. In the Fortune 100 world, they hold their executives responsible for those numbers. So if you are a hot shot out of Harvard or Wharton Business School, and you can take $1 in gross margin and control your costs so that we get 25 cents in net income, we go, great. But if you bring us back 5 cents in net income, we say, well, you are not worth the money that we've spent on you, and we need another executive handling that line of the business. However, if something were to happen and revenues weren't what they needed to be, and income dropped from 25 cents to a nickel, we wouldn't blame the hotshot MBA guy, because that was a that was erosion of gross margin. So the reason we look at direct versus indirect costs is so that we can properly evaluate the role of management in the organization.
Okay.
And so it's really important that you separate those two as you do your business. Your cost of goods sales figures should be kept separate from your indirect cost sales figures, because an eroding gross margin tells you something's going wrong in this industry. You may not need to be in this industry anymore. But an eroding net income where gross margin is staying constant is saying that whoever's managing your organization is not controlling costs adequately.
Okay. So you said a lot of things there. So I don't want to lose people.
Sorry.
But and definitely as the business owner, guess what? You get to be all the managers. So you're responsible for everything.
Well, you have to take yourself off the hook for gross margin. Gross margin is an indicator of what's happening in the industry and whether you ought to be in it or not. And that's why I would advise people to understand the gross margin in their entire product line, because it may just be that you're selling something that no matter how good you are, how frugal you are, how efficient you are with all the indirect costs, you can't make it profitable because you're in an unprofitable marketplace. You know what I mean?
And that I mean, that's a great point. One of
And I see people beating themselves up sometimes when their revenue line drops or their cost of goods skyrocket. But those are things that are largely outside of owner operator control. And so you have to acknowledge that. It's about, change the things you can and accept the things you cannot change. And so cost of goods sold versus direct cost versus indirect cost is a good way to understand, hey, what are the things that I can do better at? And what are the things that aren't good, but I can't make them better? That's outside of my sphere of influence.
Mm-hmm. Okay. So, yes, I mean, definitely, when we're looking at those, it's a great point. Thanks for, and, when we're looking at it, you've got, when you're pricing or, you mentioned it's important to understand the industry. That's where research comes in. It's important for you to know about your industry and, about, what the numbers should look like.
Yes.
One of the things that, is key, if you're a restaurant, you should know your numbers. And, I found that, in restaurants, generally your food cost should be less than 30%. Your labor should be less than 20. You really don't want your rent to be more than 15 and preferably around 10% of your sales. So if your numbers aren't in line with that, with the industry, then, your pricing, your profitability is going to be off. And, but it's an indicator of how it also indicates how you should be pricing based on, those expenses. So might be good to give a small example of how, you might costs a product. I think when I talk a lot of times, I use the store that's selling cans of soup, and the store buys them for 40 cents a can. But that's not the only cost associated with having it. So I don't know if you have an example when you're talking with people to kind of help bring the point home.
Well, generally, when I advise everyone to understand their cost profile for every product or service that they offer. So, for if someone was talking to me about a retail store that they had, and they had a blouse that they sell, or like in your case, a can of soup, we would talk through not just the cost to purchase the inventory item, We talk through the cost to store and display the inventory item. And then we would want to talk quite extensively about cost spreading. So, for example, that retail store that you have, you may be paying your rent per square foot. And that may cause you to think, well, how much space do I dedicate to the soup aisle? That may not necessarily be a fair way to assign costs to the soup cans, because then the soup cans maybe might take an unfair chunk of rent, because you're paying rent on square foot and then you're assigning rent to the soup cans based on square foot. But it's something that you would consider. So generally, if you're paying rent by square foot, a good rule of thumb then is to assign the cost of rent to each product based on how much square footage it takes up. But there may be, for example, if you're selling USB drives, those are super thin, right? And it's conceivable that a shop that sells soup could sell USB drives. But because of the risk of theft, you may have to put them in a different area. You may have to put some glass around them. You might have to put a key on them and you be a bit more, put them in a more visible way, or put a camera on them. And so you have to think about, really, what is it costing me to make this product available to my customer in the store? And the soup may not be an often shoplifted item, and you could put it at the end of the aisle, or you put it in high traffic areas, or put it right by the cash register. So you have to go through, and everybody has to get a bit of the rent, but you want to assign their costs based on how much of the building they really use or need in order to get themselves sold, and to keep themselves from being stolen and then get themselves sold. Do you see where I'm going there? So you have to assign all of your costs to your products, because you need to know what products are profitable, are being sold profitably, or aren't. But you don't want to make the mistake of just saying, okay, well, I pay this way, so I'm going to assign costs that way. You have to think about how customers interact with your product, and make sure that if that place that you're renting is really necessary to sell the soup cans, but it isn't really necessary to sell the USB drives, then the USB drives shouldn't get as much of the rent, a portion to them, as the soup cans do.
Okay. So it's important to break it down as detailed as possible.
And link it to getting the item sold. So, for example, in COVID time, there have been stores that could have taken their displays and their stores and turned them all into vending machines, because maybe the product doesn't need refrigeration, or can adapt to a vending machine very easily. So those stores now coming back into where we're back out and shopping really have to rethink maybe how they were assigning real estate costs to their products, because those products that don't really need a store to sell should not be getting real estate costs pinged to them, right? Because then you, as a business owner, don't necessarily see those products that are really hidden cost wells. They're really sucking up a lot of cost, but you're kind of divvying it up, and I tell people it's like going out to dinner with a bunch of your friends. If you didn't have the champagne, you do not want them to say, let's cut the check evenly. No, two of you had champagne. You two need to pay for the champagne. Leave us out of it. But often when the check comes, we just want to divvy it up. It's 6 of us. Oh, well, one's the birthday girl. Let's just divvy it up by 5. No. 2 of you ordered champagne and we're not paying for it. It's the same thing. All your products, make sure they're all ladies at a luncheon. make sure they only pay for what they ate, what they use, what they need in order to be sold. And that is going to help you tremendously target those products that may have really great revenue and you think are really profitable, but they're only profitable because of the other products that you're selling are absorbing a lot of their costs.
Yeah. Okay. So yeah, so definitely, looking at the costs and the detail, depending on your size of business, the level of detail you go into may vary and the number of things that you're selling. But, understanding, I think one of the big things that is important to understand is the unit cost. Like you were talking about, how much does it cost for one of these all in? Because then, you can apply your margin to that. You can say, a lot of times retail, they might double the cost. So,
and this is where you want to spend some time really setting up a, a financial accounting system. And whether it be QuickBooks, I happen to be familiar with QuickBooks, but there are other strong competitors on the market. The idea, however, is to use those, find one that suits your business. So if you have a broad range of products and you're in a business, say, like you said, like a retail store, whether you like it or not, you've got to have 50, 60 different CPUs, then you really want a financial accounting software that can accommodate that. If you're in a business that assembles maybe but doesn't manufacture, let's just say you buy red mugs and candy and you put them together and sell and cellophane wrap, and you make these adorable gift bag. You've seen them. It's a red mug that has a saying on them. It's filled with candy and then it's wrapped attractively. And these people have a real creative flair. And it's just a mug with candy. But yes, it is worth $20 because you would be very pleased to present this to someone as a gift. And I think that's an emerging market that we should be encouraging our young people to get into, because it's always good to help them get their feet wet with being the author of their own industry. But I digress. But in that case, you want a software that will allow you to, when you purchase your candy in 40 pounds or whatever it is, be able to say, okay, this is something I put 3 ounces in each mug. So you can put together, this is my Valentine's Day product. It's a red mug, 3 ounces of candy, a square foot of cellophane wrap, of 2 feet of ribbon to tie the bow, and you put all of that in your system once, so that then every time you sell one of those, or every time you create one of those, you can just say, okay, I made 10 of those today. And the system knows. And so then you put in, I bought 40 pounds of candy. I bought a gross of mugs. I bought how many yardage of XYZ into the system. And you've already coded it into the system, and QuickBooks offers you this. You've coded it into the system how you use each of these components to make your finished product. And then all you have to say is, okay, I made 10 today. And all of that is done for you in terms of your beginning inventory, ending inventory, your cost of goods sold, and your pricing, and you've built that item and the system knows it. So you're able to get that level of granularity that may already have some of you going, ooh, I can't keep track of all of that. You're able to have a software system that does that for you. And then you get to make your decisions like you're a large firm with, a financial analysis team, because the software has done that for you. So I think we have to, as small business owners, pay careful attention to the software that we use, get them professionally set up, speak to your accountant and your tax preparer, let them know what you do, how your business operates, so that they can set you up in QuickBooks or Peachtree or whatever it is, in a way that you just put in the information, the bill comes, you enter it, and the system knows how you do business. And so it does all that detail costing for you.
Okay. Okay. So yeah, I mean, definitely taking advantage of technology and being able to understand your cost and what's happening with your costs is key. Um, you've got your unit costs, but one other thing that's helpful to understand, depending on your business, is your marginal cost. And sometimes your marginal cost changes based on how much you're selling. And it's important to understand that. Can you talk a little bit about marginal costs and what that is,
Sure.
how that works?
This is the relationship again between variable, meaning costs you can control, and fixed, meaning costs that have less control. And I remember earlier in the hour, I said generally a lot of bakers and a lot of businessmen sleep better in the years after they've paid off those big things. So you bought an oven and the oven still hasn't paid off, and you're watching every dime until the oven gets paid off, because your marginal costs early on in that oven's cycle when it hasn't been paid off is really essentially, let's just say I buy a $5,000 oven and I make a batch of cupcakes. The cost we assign to it, variable cost, the flour, the eggs, and then because we know we're going to have this oven for many, many years, we assign a portion of the oven to the cup to each cupcake. But truly, you've spent $5,000 on the oven plus $10 in ingredients to make a dozen cupcakes. And so you could say the marginal cost of those cupcakes is 5,000 plus $10 divided by the 12 cupcakes. And then the next day when you make another 12 cupcakes, oh, well, now you spent $5,000 plus $20 divided by 24 cupcakes. And so the costs change like that. And so marginal cost is saying what are the incremental costs for each cupcake that you produce. And sure, it's going to go down with time because those fixed costs are coming down to zero. And so when you have a business where there was a lot of upfront spending, marginal cost is something that you keep an eye on, because there'll be a time where you kind of, people call it turning the corner. If you have a business where they're very low fixed costs, you don't see that much change in marginal costs as quantities go up. But it's all part of the economics of large numbers, so scale of return. So as you do more, it's easier for you to do more because you've got fixed costs that are just giving you a great deal of capacity. And so your marginal costs come closer and closer to purely variable costs.
Mm-hmm. So, okay. So like you said, economies of scale, and as you sell more, each item you sell is more profitable.
It's more profitable.
So,
and as you predict better also. So you sometimes you don't even need to sell more. You just need to have done some work on market analysis and know what you're going to need. And so if you can do more tailored selling. So for example, where that's key is, and if you keep your handle on your costs really well, if for example there is a temporary sale and flour is half price for whatever reason, if you have kept a really good control over an idea about your costing, you will know whether it's profitable to buy that half price flour and then slash prices on your cupcakes to up your sales and make a profit. Sometimes people say, oh, half price flour, I'm gonna buy the flour, but then you want to move product in time and they don't really know, well, how much should I adjust my cost or my price in order to move more of the product. So all of these things are this webbed interconnectivity.
Okay. So yeah. So I mean, definitely things fluctuate and things change, but you need to know at least what you expect so you can understand if things are going the way they should go,
They should
if
go
they're not, and if there's a change, you can have an idea of what to expect the impact of the change to be.
to be.
So that you can be proactive and make decisions for your business instead of being like many people having decisions made for your business and made for you because you weren't prepared in advance. Um,
Yeah, there are a lot of opportunities can be had if you have very good control of an idea of your costs.
yeah.
A
Okay.
lot of opportunities can be had.
Okay. We've got a couple questions. I haven't missed you. So, this first one we're going to do real quick from JMD Janitorial. So appreciate your questions, Gloria. We'll get to yours right after this. But you mentioned, oh wait, that's not the question. Hold on, let me go back. Okay, I know there's a question. Oh, here we go. Okay, about credit cards and loan debts. And that's a good piece, but we don't have enough time to go into financial statements and everything. But
well, generally speaking, we get loans to purchase fixed assets and things that are generally part of our fixed costs. So as a rule of thumb, I would look to your loans and say, okay, what is it that we took that loan to buy? I would expect it to go across to a fixed asset.
Yeah, I mean, it depends on what you bought is basically what it is. Especially on your credit card, you may buy things that are fixed. You may buy things that are variable.
Right.
So,
That's correct. Loans, that's, but credit cards can be anything these days, and people
yep,
love miles.
yep.
So, sometimes people buy things that they have cash for just because they want to run it through their card and
Very
get some
true. Very
miles.
true.
So yeah, I would say the JMD janitorial, there's no way to infer from the method of payment how to classify a cost.
Right, and those will show up on the balance sheet more than the income statement where you get your costs. So now another question is some examples of profit margins by product type. And before we do that, I would say when you think of pricing, when someone says, okay, well, how much should I charge? And I always hate the answer, but it's the right answer, and it's whatever the market will bear. So as much as people are willing to pay, you should charge, but it's like a catch-22 because, well, I don't know how much people are willing to charge. So,
and don't forget, your market varies by who sees that your product is available for sale.
Yeah.
So certainly if Kim Kardashian sells perfume, she's selling to a different marketplace than if I decided to start a perfume line, because nobody's going to notice me and my perfume unless I get, arrested for throwing a bottle of it at Kim Kardashian. So
that's a good strategy. No. We could do that, but it depends. A lot depends on your industry. Like you said earlier on, pricing can be dictated by your industry, so you may not have much control over your pricing. But the more differentiated what you offer is, and especially as a small business, a lot of times you may differentiate what you do by service and other stuff, so you can charge more because generally you can never win competing on price as a small business. So,
but there are a few. I'd like to offer a little insight here.
mm-hmm.
So, for example, when you're looking at your costs and then you're looking at your markup, so you're going to say, here's how much it costs me to make this, then here's how much it costs me to provide it for sale and get it into the hands of my customer. And so that's my fully loaded, shall we say, costs. And now the gap is between that fully loaded cost and what the market will bear. I think that after you get your fully loaded costs, you should also put some markups on it. And think about things like shrinkage And that's not just if your employees steal, but if pests destroy some of your inventory, if there is a need, maybe if you go on a road show and there's a need maybe to open up a box and let people feel the t-shirt and go, oh yeah, it really is nice, and they don't want to buy the t-shirt that you've just opened up and they know that they're the only one who's touched, they still want to get an unopened box and purchase it. So you start to think about how much shrinkage there is, and you should, if you experience 3% shrinkage, then make sure that at least you put a 3% on top of your costs as I don't want to be in this business if I have to lower my price all the way down. So you have your price sort of like, here's what it costs me to make the product. So I know I have to sell it at least for that. But then you say, no, I have to sell it for at least that plus 3% because I know 3% shrinkage is what I'm looking at. And so if you have a product that has an expiry date, you might want to look at 10 to 15% as a level on there because of because your vulnerability to shrinkage.
Okay.
If you have a product that is trend based, you might say to yourself, okay, well, I'm going to put a percentage on there because of the risk and exposure to trends. So I like to tell people that I work with, kind of look at some of the risk that you face by putting a product on market, and make sure that when you're thinking of your bare minimum of what I will charge, don't just look at your fully loaded cost structure, but put some of those percentages on as well. And shrinkage and exposure to trends are one that I.
Okay. And we're coming up on the hour because it always goes really fast. But just a couple quick things to think about.
But in specific answer to the question, that is market research that you can get out there and purchase in terms of, because I know when I was at Wharton, we actually did it for, I'm gonna age myself.
So
we did it with Blockbuster.
Okay. So
and Blockbuster. Blockbuster. And Blockbuster was gross margin was 25 cents for every dollar in revenue. And then I've been on the board of a nonprofit that has a string of nursing homes, and our consultants would tell us for every category of nursing home care that we offered what the industry was in terms of those gross margin percentages. So not profit margin specifically, but at least gross margin. Those figures are available. You may have to, they might be behind the paywall, but you probably could get maybe 10 years out of date information relatively cheaply, and then consider how much the industry has changed in that intervening time and see if it's still valuable to you or not.
And, just a couple back of the envelope things, just if you're thinking about it. If you're retail, I usually recommend at least 100% markup on the fully loaded cost, especially if you're a small business. If you're a service business, usually you have very low variable costs unless you charge by the hour or by a certain amount. So your margin should be a lot more than that.
A lot of service also have high fixed costs. I could imagine if you are a masseuse therapist or something like that, you have the lotions and the oils, etc., but then you've got to have a location, and that can be rough. Even though you're a service industry, your costs can still be significant, and they're more fixed and less variable. So again, your marginal costs become very important there. So
okay, cool. So I wish we had like 5 hours, but nobody would listen to us for 5 hours. I'm sure we could still talk for 5 hours.
I can't believe the hour is up already.
Yeah. So, but
I feel like we haven't even scratched the surface.
Right. So we'll have to have you back. But before we close out, I want to share some information, but also Cecile, want you to kind of really just think about 3 key things you want to leave people with, so that they tomorrow, when they're thinking about their pricing and their costs, what should they do? So I'll give you a minute to think about it.
Okay.
I just want share a little bit. I've been doing a Power Breakfast event for the last 10 years for entrepreneurs and business owners, and we have another one coming up on March 24th. So if you're in the New Jersey area, definitely invite you to check it out. If you've never been, let me just show you a little bit about what the Power Breakfast is, and that'll give you some insight. If you are looking to increase revenues, improve profitability, and or obtain financing for your business, you need to check out the Power Breakfast and Small Business Pro conferences. My name is Andrew Frazier. One of the things we're here to do is supercharge your day.
Today's Power Breakfast has really been a phenomenal experience. I think it's exactly what business owners need, some true guidance of people who are genuine and really are leading them in the true direction of business growth and expansion.
The Power Breakfast is so important for the entrepreneurial community because it gives the various business people who come together an opportunity to interact and also do some business.
These events, hosted by Andrew Frazier, President and COO of Small Business Like a Pro, will supercharge your day. Okay, so hopefully if you're around March 24th, come check us out. Our speaker is going to be John Kennedy, talking about leadership in challenging times for the breakfast. And for the lunch, we've got Precious Williams, the killer pitch master, who's going to be talking about how to pitch for profits. And that's something that we all need. So definitely check us out, the-power-breakfast.com is where you can check it out, and I'll put it in the chat as well. So definitely. So Cecile, we've talked about different things. What would you say we should take away and put to use tomorrow when we're thinking about our business?
Okay, great. I jotted down a few notes here. The 3 things I'd like you to take away and change about your thinking immediately is: 1, if you just backed into your accounting system, you just started putting something into a software because you needed to get some handle on what you were spending and what you were bringing in, I would encourage you to carve out some time and some resources to work with a financial professional to get your accounting software set up properly. Whether it's QuickBooks or anything else, it should be saving you time and giving you excellent analytics and insight into your business. And if it's not, it probably has not been set up correctly for you because you are a unique entity. And I would encourage you to think seriously about starting over and having someone help you build it so that it captures your costing and your pricing and your selling information in a way that you can use it more effectively. The second thing I'd like you to remember that when you assign costs to your product line, remember that ladies at lunch analogy, and it's just that serious. Nobody wants to pay for champagne they didn't drink. And that's exactly how each of your products feel about the cost you assign to them. So make sure that costs are assigned really based on how the product uses the resources to get itself made and to get itself sold. And the third thing I want you to really think about and make sure you continue to think about is that the path to success is not unfettered success. It's not unblemished success record. The path to success will include U-turns, turnarounds, and admitting that you made mistakes. And so I want you to think of decisions you make as highly successful decisions that made or did not make money. But whether or not something you do makes money or is profitable or cost you or caused you to suffer loss doesn't mean that it wasn't an important and a valuable step towards your future success. And many of you and many of us as business owners are tremendously successful, and we do not realize it because we are measuring our success only by our net income or loss and our net income or loss today. And that's not an accurate measure. And those companies that are successful, read some books about it. There were times, long times in their history where they looked very much like an unsuccessful company. And indeed, they were a hugely successful company in the making. And so don't define yourself by a net loss today, because every company has had those times.
Okay. That's outstanding. I mean, have your records keeping system accurate and set up to you and your business. And so many businesses I run into, even in $1 million businesses, do not have that. So definitely, and it's best to set up from the beginning. But if it's not set up, definitely the details. I'm going to have to take you out every night I go with my friend to make sure that we split the bill based on what it costs, rather what each of us cost, rather than paying than fully, especially since I don't drink. But definitely that. And then, ups and downs. I mean, it is not easy being a small business owner. You always have to build for the future. So your current results aren't always reflective of where you are. And you cut yourself some slack and celebrate your wins.
Exactly. And if anyone wants to talk to me more, I'm at creidcpa@gmail.com.
Okay. So definitely feel free to reach out to Cecile. This is her LinkedIn as well. So you can
great. Yeah.
And it's in the chat. So thanks again, Cecile. I appreciate you hanging out tonight.
Thank you for having me. And I appreciate you giving me an opportunity to speak to your subscribers and your followers. And it's always a privilege.
Okay, thanks. Hang on a sec and let me just close out. So once again, thanks for joining into Leadership Live at 8:05. It's great talking to Cecile. This is important stuff. And, she's taking out time out of her busy schedule to hang out with us and share her expertise. So definitely appreciate that. Great questions from the audience, great comments, and always appreciate that. And keep them coming. Looking forward, each week we have great guests. So looking forward to next week as well. Next week, we're going to have Alex Marin. He's going to talk about the secret to successfully financing your business. I know a lot of business owners, that's an important thing. And, Alex is great. He's been at it for a long time, and, he's done millions of dollars in loans for my clients. So, he doesn't just talk about things. He does the financing and makes it happen. So definitely hope you can join us then. I talked about the Power Breakfast coming up. The week after that, we have Jimmy Newsom. You may remember him from the beginning of the year. And, he's a digital marketing strategy, tremendous guy. He's going to talk about creating content that converts, because in the digital world, that's very important. So we've got some great things coming up. Definitely feel free to subscribe, join in, look out for us every Tuesday night at 8 p.m. And, at the end of the day, what's most important is the more that you know as a business owner, the faster and more successfully your business is going to grow.
Thank you for listening to Leadership Live at 8:05, Talking Small Business. Subscribe to our YouTube channel and to the podcast on your favorite podcast platform. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbpro.u.com.